been growing commercial loans and consumer loans, and our balance sheet and our trading business, we increased by about 20%, 30% to serve the trading customers better. So all that's gone very well. Now, the reality is on the consumer side, the credit quality, in addition to them having money accounts and earning more money and having access to credit, the credit quality is as good as it's ever been.
Really? I mean, that's a good sign here, at least for Bank of America. CEO Brian Moynihan telling Fox Business today that his bank is growing the lending department and consumer credit is still very strong. In fact, better than it has been. But that's what the Goliaths of finance say. So what about the Davids? How will interest rate increases, along with mortgage rates rising, affect lending at the regional banks and their stocks? And just how healthy is consumer credit on that level? Here in a Fox Business exclusive, Valley National Bank Chairman and CEO Ira Robbins. Well, how about that? I mean, are you seeing what Brian Moynihan is seeing? Because regionals are a different kind of animal here.
Yeah, I think we're beginning to see a slowdown in some of the retail sales areas that we deal with, and specifically on residential mortgages, activities down about 30%. Refinances are down about 70%, and purchases are down about 13%. But when you look at the consumer in general, there's still strong demand, but we're beginning to see over the last 7 weeks or so a slowdown in some of those activities, whether it be apparel or some of the other areas. Amazon, as many well know, have begun to scale back on some of the warehouse space, and that's going to begin to have an impact definitely on overall retail sales.
Yeah, I see that from sort of the Fed funds rates, and then of course regular sales taxes are starting. Everything is really on the move here, but the point that I look at is the mortgage lending part of this. Talk to me about how you're seeing those trending and we can put up the 30-year fixed rate at the moment, at least the latest print of it. You could see where it was in December was around 3%, 3.5%. And now, you know, to be well above 5% is something that's makes me think, how are regionals, who are really the yeoman lenders out there, right, for communities all around the world and the nation, how are you guys dealing with it?
Well, I think there's two areas that are really being impacted on the residential side. You know, first-time home buyers are largely out of the market now based on the rise in interest rates, and that's really going to continue to decline what the demand is going to look like.
Right.
The other thing that we're seeing now is portfolio loans, jumbo loans, are actually pricing through where a conforming loan is, as banks are beginning to try to portfolio more on their balance sheet as opposed to selling to some of the secondary markets. And when that really happens, from my perspective, that really is a shift as to what's going to happen with the residential market as we move forward.
Is there,
I
have to ask this, is there anything, Ira, that gets your spidey sense up? I mean, we all remember 2008 and the financial crisis, and quite frankly, the years before that when people were profligately lending. I keep hearing that people are going for interest-only loans and short-term ARMs, and I just wonder if there is some built-in rot underneath that trend that you as a banker worry about. Have you tightened your lending standards?
We really haven't seen that, honestly, Liz. We really have a lending standard that's been true to us in recessions and expansions, and that's one of the reasons that we've been so profitable over so many years. You know, that said, I do believe there is a separation between what's happening on the commercial side and on the consumer side. The commercial customers still seem very strong balance sheets, and demand is very strong in that segment as well. You know, the increase in interest rates, 10 years gone up about 100 basis points. But when you look at some of our commercial customers, we're only seeing maybe 5-7% decide that the interest rates are an impediment to the project that they were working on, which really isn't that significant when you think about it.
You know, retail giants Walmart and Target had kind of made a mess over the past couple of weeks when they came out and said, you know what, things have changed literally over the last couple of weeks. And Snap had the same story. My interest, when it comes to something like that, can you triangulate it and take it to your clients and your customers at Valley Bank? And do you see any changes in them and the way that they are behaving with their spending and with their applications for even business loans?
You know, the business customer is still really strong, Liz. They've been able to push through most of the increase in inflation that they're seeing on the expense side. They haven't had much trouble pushing that through to the consumers. Our auto dealers still seem to be very strong as to what they're seeing. I would tell you on the auto side, though, there is a bit of a divergence now when you look at $30,000 cars. So below 30,000 still a huge demand. Above 30,000, there is a bit of a slowdown. So we're beginning to see segments of the economy really begin to move differently than other segments. But overall, I would still generally say we are still very, very strong.
Very interesting. So the auto loan. See, I want to always try and give our viewers that opportunity through the eyes of people like you who are knee deep in it. I mean, you're in the trenches and you're able to start seeing things before they hit the headlines. And that's what we like to bring to our viewers. Thank you so much. It's good to see you.
Wonderful to see you too. Thank you so much for having me.